Those indicators right here beautifully show you that history is currently repeating itself, and so you can actually profit from that. In today's natural gas analysis, we take a look at the most important technicals, fundamentals, and also macroeconomics of this commodity. We have recently seen that massive sell-off here in natural gas. We have seen that this bottom support is currently being retested. We are seeing that volume delta is currently at neutral levels. And we are also seeing that convergence here at the RSI, which seems like they could cross in the next few days. If you have a look at the hourly chart, you can beautifully see that again. You do see this bottom support at around $3 is currently being retested, and we are currently seeing that counter move rally to the upside here. But whether this is actually about to end in a deeper correction or in a deeper structural upward trend here in the next few days and weeks, we can only answer that by taking a look at the macroeconomics and fundamentals of this commodity. And so let's have a look at the weekly chart of really understanding what happened the last few times the history does repeat itself. Let's have a look at the weekly chart here. You do see that a lot of tops here at natural gas that we've beautifully marked by those blue trend lines here, they've led to massive downward trends here at natural gas, and that always coincided to the same things happening to the gold to S&P ratio and also the copper to gold ratio. You do obviously see that before those economic crises happen, before those downturns happen here at natural gas, you see that gold starts to outperform against equities, against the S&P 500, for instance. Exactly, that's what happened here previous to the great financial crisis. That's also what we've seen happening here before the crash in 2011 and 2012. We've seen that big outperformance of gold against the S&P. Also here previous to this 2014 downturn, we haven't really seen that coincide to a upwards trend here at the gold to S&P ratio, but we have certainly seen that this weakening trend slowed down, and eventually it also reversed here as we've hit the bottom at natural gas. Quite similar things have been happening here previous to the 2020 Corona crash. We've seen the top here in 2018, in December 2018 at natural gas, and that in fact already coincided to this reversal at the gold to S&P 500 ratio, where we've started this new upwards trend. Now, as you may already have guessed it, we are currently seeing exactly that same thing happening. Again, we are seeing history repeating itself. We do see this upwards trend here. The top of the S&P 500, if measured in gold, has actually been here in 2021. And so this beautifully shows you how manipulative the chart of the S&P 500 can actually be if it is measured in dollars, because dollars are obviously no constant. They are changing daily. They are the dollar strength is changing daily, and so obviously you have to take a look at those ratios to really understand the underlying market dynamics. And so if you like this approach, please make sure to subscribe to our channel and like the video so you don't miss future videos like these, and also support us for work here on YouTube. If you want more, please check out our Discord server, and also don't hesitate to ask questions or just give us your opinion down in the comments. Thanks for your support. Now let's continue by having a look at the copper to gold ratio. It's quite similar, just that we do see a negative correlation at this point. We do tend to see a divergence happening before massive crashes happen here at natural gas. For instance, we've seen that natural gas rallied previous to the great financial crisis, for example. We've seen that coincide to a massive weakening rally here at the copper to gold ratio. We've seen that divergence actually play out for years before the crash happened. And then eventually we've seen that ratio here basically fall off a cliff, and we've seen that bottom form out. And so you do beautifully see those divergences with those blue trend lines here, and all of those instances that we've just discussed, those have occurred. And there is that seems to be also one of those aspects that we really have to take a look at, because if you think about it, whenever you do see that copper is basically weakening against gold, or when the S&P is weakening against gold. Essentially, whenever you do see that gold is outperforming everything, and essentially that seems to signal quite well empirically that there is a massive economic downturn ahead. We have seen that here in all of those instances, and as we are currently seeing that happen again here with this recent decline in the copper to gold ratio, and with this recent or with this year-long rally that we've now seen, in fact, here at the gold to S&P ratio to the upside, that seems to beautifully mimic what we've seen happen in the past. And also concerning this divergence, we haven't really seen a downward trend begin here at natural gas, and even though we have seen that downward trend here at the copper to gold ratio, which actually signals that economic activity is currently going down, as obviously copper is a industrial metal and gold is not of such importance, because it is more important for the investment sector, essentially, or as a hedge against inflation and economic crashes and recessions. And that beautifully shows you that the safe haven asset gold is currently really outperforming not only the equity markets, but also the industrial metals, which obviously historically always indicated bigger economic downturns ahead. Now it's really quite difficult to time whether this is already the top here in January 2026. Obviously, we could see another upwards trend actually begin. We do have scenarios in which we might see this upward trend happen. But obviously, the downside potential is definitely given. We have seen that massive cross here at the RSI. Essentially, if we do see that rejection here at the moving average to the downside, that seems to be just one of many bearish factors that are currently in play here at natural gas. And it seems this $3 level seems quite important, and if we break below it, that seems to be certainly it seems to be an invalidation of this long-term bullish structure that we've seen here for years now, since this bottom in 2024. And so we're going to update you on that further in the next few videos. So if you don't want to miss them, please make sure to subscribe and like to support us, and don't miss it. Yeah, I really appreciate your support. It's really great what we have built up in the last few months here at Chronos. Thanks for your support. See you the next time. Bye bye.